Dear student, today we are going to learn chapter 1st company final accounts, lecture 3rd, problem number 1. Before the solving the problem, we have to read the problem properly and decide the how to solve the problem. Omkar Company Limited ask you to prepare profit and loss account, profit and loss appropriation account for the year ended on 31st March 2018 and balance sheet as on that date in prescribed form. The trial balance of the company as at 31st March 2018 was as follows. Trial balance, all figures in thousand. Particulars, debit, credit. Equity share capital, credit balance 1,50,000, security premium 20,000, credit balance, general reserve credit balance 28,000, 6% debentures credit balance 10,000, land and building debit balance 80,000, plant and machinery 1,36,000 debit balance, investment 20,000 debit balance, stock on 31st March 2018 14,000 debit balance, balance at bank 4,600, cash in hand 160, profit and loss account credit 1st April 2017 balance 5,000, sundry creditors 12,000 credit balance, income tax deducted as source 240 debit balance, establishment expenses 10,400 debit balance, rent and taxes 480 debit balance, debenture interest 300 debit balance, audit fees 600 debit balance, sundry expenses 1,740 debit balance, dividend 2,240, gross profit 42,480 credit balance. Instructions: first, authorized capital of the company is 20,000 equity shares of rupees 10 each. Second adjustment, depreciation is the provided 5% on land and building, land and building, and 15% on plant and machinery. Third, provision for taxation to be made at 50% of net profit. 4. Transfer rupees 200 to general reserve. After the reading problem, we are going to solution. First we have analysis. First, prepare note and then draw balance sheet and statement of profit and loss as per Schedule 3 of Companies Act 2013. Second, transfer to general reserve should be deducted from surplus and added to general reserve. Third, TDS should be disclosed under short-term loans and advances. Fourth, interest on debentures should be provided for 6 months. Note to accounts. Before the solving the problem, we have to prepare notes. Note first, share capital. Authorized share capital 20,000 equity shares of rupees 10 each, 2 lakhs. Here 20,000 multiplied 10 is equal to 2 lakhs. It is a authorized capital. It is not addable in balance sheet. Only we have to show here. Issued and subscribed 15,000 equity shares of rupees 10 each, 1,50,000 These 15,000 equity shares issued out of 20,000 equity shares of rupees 10 each. Calculation 1,50,000. Note second, reserve and surplus. Security premium, balance as per trial balance. General reserve, balance as per trial balance. Add transfer 200 as per adjustment. Total 28,200. Profit and loss account, balance as per trial balance 5,000. Add profit for the year 2,650. It is ascertained from income statement or profit and loss account for the year. Total 7,650 less transfer to general reserve 200. After the deduction of reserve 7,450. Total of reserve and surplus 55,650. Note 3, long-term borrowings 6% debentures. This balance is given in trial balance. Fourth, trade payables, sundry creditors 12,000. This balance also given in trial balance. Note number 5, other current liabilities, outstanding interest on debentures. This is the calculation. 10,000 multiply 6 divided 100 multiply 6 divided 12 for 6 months. 300 rupees. Short-term provisions, provision for taxation, 50% of profit before tax after the deduction of 50% tax, after profit after tax 2,650 or 2.65. Tangible assets, land and building 80,000 less 5% depreciation. 80,000 multiplied 5 divided 100 is equal to 4,000. After the deduction of depreciation, net balance is 76,000. Plant and machinery 1,36,000 less 15% depreciation. After the deduction of 15% depreciation, rupees 20,400. Net balance 1,15,600. Total of tangible assets 1,91,600. Non-current investments 20,000. It is given in trial balance. Inventories, stock 14,000. It is given in trial balance. Note number 10, cash and cash equivalent. This is also balances given in trial balance. Cash 160. Bank 4,600, total 4,760. Note number 11, short-term loans and advances. TDS, it is given in trial balance 240. Note number 12, revenue from operation, gross profit. This is balance also given in trial balance 42,480. Note number 13, other incomes, dividend, balance from trial balance. Note number 14, finance cost, debenture interest for 6 months 300. Add outstanding for 6 months 300, total 600. Calculation is 1 lakh multiply 6 divided 12 multiply 6 divided 100. Note number 15, depreciation, land and building. This balance transfer from tangible assets, depreciation balance. Plant and machinery also 20,400 transfer from tangible assets. Total depreciation 24,400. Note number 16, other expenses. Establishment expenses 10,400, balance as per trial balance. Rent and taxes 480, balance as per trial balance. Audit fees 600, balance as per trial balance. Director fees 1,200, balance as per trial balance. Sunday expenses 1,740, balance as per trial balance. Total of other expenses is 14,420. Now we are going to prepare in the books of Omkar Company Limited profit and loss account. for the year ended 31st March 2018. Particulars, note number, rupees. First, revenue from operation. Balance as per note number 12, 42,480. Second, other income, note number 13, 2,240. 3. Total revenue 1 plus 2 is equal to 44,700. Fourth, expenses. Finance cost, note number 14, 600. Depreciation and amortization expenses, note number 15, 24,400. Other expenses, note number 16, 14,420. Total expenses, 39,420. Fifth, profit before tax, 5,300 or 5.3, less provision 50%, 2,650 or 2.65. After the deduction of tax, profit after tax 2.65 or 2,650. Now see balance sheet as on 31st March 2018. Particulars, note number, rupees. Equities and liabilities. Shareholders fund. A. Share capital, note first, 1,50,000. B. Reserve and surplus, note second, 55,650. Total 2,05,650. Second, non-current liabilities. A. Long-term borrowings, note number 3, 10,000. 3. Current liabilities. A. Trade payables, note number 4, 12,000. B. Other current liabilities, note number 5, 300. C. Short-term provisions, note number 6, 2,650. Total 14,950. Total of liabilities 2,30,600. Then part second, assets. Subpoint first, non-current assets. A. Fixed assets. Tangible assets, note number 7, 1,91,600. B. Non-current investment, note number 8, 20,000. Second part, current assets. A. Inventories, note number 9, 14,000. B. Cash and cash equivalent, note number 10, 4,760. C. Short-term loans and advances, note number 11, 240. Total 19,000. All the balances of notes are transferred from notes. Total of assets 2,30,600 or 230,600. Thank you.